This is Capital Ideas TV. Coming up, the CEO of Village Farms International, from tomatoes to cannabis, with ambitious growth plans. Small cap specialist Ryan Irvine, uncovering 2 hidden gems, plus insider buying and 52-week highs and lows. Hello and welcome to Capital Ideas TV. I'm Mark Bunting. Village Farms International has been around as a company for about 30 years, and it's been listed on the TSX since 2004. It says it is North America's largest grower of greenhouse tomatoes, but recently Village Farms struck a transformational deal with Emerald Health, whereby it's going to allocate a significant portion of its growing capacity to cultivate cannabis. Now, Village Farms says that in a few years' time, it hopes to supply about half of Canada's cannabis needs. The CEO of Village Farms says this story is not being recognized by the markets just yet, and he thinks the shares are significantly undervalued. Here's our conversation with the CEO of Village Farms, Michael DeGiglio. Michael, before we get to the Emerald Health joint venture, let's talk about Village Farms, the history of the company, how you've built it along with your team, and the culture as well.
Okay, well, Village Farms, we're almost a 30-year-old company. We are one of the, if not the oldest operating company in North America. We produce produce, specifically now tomatoes, cucumbers, peppers. And we're vertically integrated in that we design the greenhouses, build them, own the assets, do all the growing, all post-harvest, and then all the fulfillment, sales, marketing, distribution. We sell marquee retailers through North America. So that's really been our forte, but over the years we've grown many other products, roses, herbs as well. So that's a little bit about the produce side of the business.
So you looked around the landscape and you decided, and actually had been looking at higher margin products, so you make this big, what you call transformational deal with Emerald Health to form this joint venture, Pure Sun Farms. Explain what it is you've done here.
Well, we always have programs going on for looking at other high-value crops. We're a public company. In fact, we've been on the TSX now almost 11 years. So, you know, our mentality as a public company has to be, what other high-margin products can we grow? So we always have research going on within the fruit and vegetable sector. When cannabis was legalized for medicinal purposes in Canada, it really caught our attention. And as we modeled the numbers, it was amazing. And transformational is the right term, because when you look in terms of contribution, let's say revenues would be in the realm of 10 to 15 times higher, but even more importantly, the EBITDA margins, where we're operating in single digits, are greater than 50%. And that's taking a very conservative price. If you actually, you know, so we wanted to pursue it, but what really was a catalyst for us is when the government decided that they'll probably, or look at recreational, due to the fact that our minimum smallest asset that we can convert, not build but convert, was 1.1 million square feet. And that's a Delta 3, we call it Delta 3. We have 3 adjacent greenhouses in Delta outside of Vancouver, the smallest one being the 1.1 million square feet. So we decided that we would pursue cannabis, and we wanted to pursue it with a joint venture partner.
Tell us about the scope of what you think you can achieve in terms of your expansion and your ultimate growing capacity.
Well, with Pure Sun Farms, that's the joint venture we created with Emerald. And initially, the 1.1 million square feet, which we're in the process of starting the conversion now and applying for our secondary license with Emerald, in September, would commence immediately in doing that conversion, and the hopes would be that we would be able to get a initial production license second quarter of next year on a quarter of that facility, 250,000 square feet, which, by the way, is about one of the largest current facilities or size facilities that's being contemplated within the industry. Certainly the 1.1 million square feet would be the largest. So, you know, that's what we do, large scale. We're not afraid of it. It's what we do, large scale ag. We've been doing it for 3 decades. So we're pursuing it at that level. And that 1.1 million square feet, to put it in perspective, growing 75,000 kilograms would be about 75 million grams. So if you looked at it you know, you can do the math. If you calculate it at $4 a gram, just say, before it commoditizes more, that's $300 million in revenue. So taking 10% of our assets would generate $100 million more than we generate today, because today our revenues are just north of $200 million.
But you're thinking even bigger than that. You think you can get up to what, 300,000 kilograms?
At least 300,000. So in the Pure Sun Farms has an option for the other two adjacent facilities, which would bring those three to a total of 4.8 million square feet, which would generate a minimum of 300 million tons. 300,000 kilograms rather,
right,
or 300 million grams. So now you're really getting north of $1 billion in revenue on that conversion, and that 300 represents about 50% of the current contemplated market in Canada.
So you potentially you could have you'd be supplying half the market, half the demand.
At the current numbers, unless the market grows, we have that potential to do so, yes.
All right, so Emerald is putting in 20 million over some stages. What's your cost, and what's the revenue split between the companies?
Well, it's a 50-50 between us. So each of us, Emerald and Village Farms, owns 50% of Pure Sun Farms. We've contributed the first greenhouse at $1.1 million. They've contributed $20 million for the conversion process. And they have, the JV, as I said, has the option to purchase the other two facilities at a predetermined price over a period of time.
Off air, you said that you actually know Vic Neufeld from Afria. We had Vic in here a while ago. It was a very popular episode, and I told you that when I hear greenhouse and marijuana, I think Afria. So you're, can you learn from them in terms of what they've done because they're ahead of you, or do you just see them as a competitor?
No, I don't see them as a competitor. I mean, we have competitors within the produce industry, and I'm smiling because I actually know one of the co-founders' fathers from the produce side of the business, going back, 3 decades. But I think their model is akin to our model, and that's the model I truly believe in. I mean, I don't, so speaking for us, this is farming. Why wouldn't you grow in high intensive agriculture? These greenhouses are controlled environments, but it's still farming. It's utilizing natural resources like the sun. And compared to the big box model, and just from our perspective, it's about low cost production. So what they're doing is akin to what we do. Our difference is we're converting existing high-tech greenhouses that we have as opposed to building from the ground up.
Right.
And speed to market's really important, but we have those assets enabling us to do it, and I think that's a slight difference.
Michael, you're on the marijuana side, a very hot sector, as you know, but things have sort of cooled off, shall we say, for now. Do you think your company is under the radar of investors? And if so, what do you say to them to get you on the radar?
Well, I clearly think we're under the radar. There's no doubt in my mind. And I think, when I look at our model where we have an existing couple $100 million business that is profitable, we're able to make this transition into the cannabis space without raising any money. Everyone's paid for. We have incredible depth within our country. We have over 750 years of growing knowledge, third generations from all over the world, the Netherlands, Sweden. So we have, within our ranks, we have tremendous knowledge. And I think that once that comes to the forefront of how we're different than other companies out there, and we start to demonstrate the process we're going through, I think that it'll resonate very well with investors of where our market cap can go in a relatively short time. And
do you think, in terms of your share price, the potential for the marijuana cultivation is not even being priced in yet?
I believe so, yes. That's my viewpoint. I think the upside is tremendous going forward.
So who's been doing some insider buying lately? Well, how about at DEALNET Capital, where we've had 5 insiders since August 21st buy 4.3 million shares. Now, this is a stock that had been doing a lot better several months ago, plumbing new lows here, but these insiders showing confidence by buying some shares. You've got the executive chairman increasing his stake by 40%, 3 directors increasing their stakes anywhere from 35 to 46%, and the senior VP picking up 150,000 shares at lower levels. Ryan Ryan Irvine of independent research firm KeyStone Financial is a well-regarded and well-followed small-cap specialist. He has the ability to do extensive research to uncover hidden gems, and his 18-year track record of an annual average return of more than 37% is very enviable. He's got a few ideas for you today. We caught up to him at the Money Show in Toronto. Here's our conversation with Ryan Irvine. So Ryan, let's start with Sylogist. They call themselves a technology innovation company. What do they do and why do you like them?
Well, they provide cloud-based software under the Microsoft's Azure platform under a SaaS model. They were kind of SaaS before SaaS was cool.
So software as a service.
Yes, exactly. So about 60% of their revenues is maintenance and licensing agreements or subscriptions. So what you see there is a very sticky revenue base. What do? They provide anything from workflow software to accounting back-end systems for non-profit organizations, mainly government organizations, everything from Red Deer School Board to even in a division of GE. So diverse, but mostly non-profit organizations. What we like is companies with consistent track records of revenue and earnings growth. And we see that in Sylogist. Over the last 5 years, from 2012, they made around $9 million in revenues, up to 2016 was about $35 million. EBITDA over that period went from around 3.9 to 13.5, so tremendous growth. They grew their dividend consistently over that period. We love to see that. This year, they're taking a pause in terms of organic growth. We think that's an opportunity, and we've seen the fourth quarter was weak, but going into the first quarter, to the second quarter, to the third quarter, sequential revenue growth to the point where EBITDA or cash flow growth was up in Q3. We see a return to organic growth in Q4. Now, the valuations on this company is what we like. We think over the next 12 months it can earn around 61 cents per share. That leaves it at 13 times multiple of earnings. Relative to peers in the US, a SaaS model company would be trading at 30 plus. Even if you give it a market equivalent multiple of say 18 times earnings, that gives you a target price of around $12.25. That's a 45% lift from where we are today. You get a 3% dividend as well. Pristine balance sheet, we love that. It's about $30 million in cash in the bank, no debt. That $30 million is $1.33 per share. It's a lot of numbers I'm saying, right? Yeah. $1.33 per share. So it's trading at $8.40. It's a huge part of the market cap is in cash. So we love that. I think it's growth at a reasonable price, organic growth next year, and they also have some cost savings with their Microsoft partner. They've reduced their royalty rates, which should go, a lot of that will go to the bottom line. It could even come in around $6 million more. About half of that will probably go into organic growth initiatives, but they certainly have the cash there to make acquisitions as well.
All right, perfect. Lots of information there. Next idea you've got for us, Ryan, is Hammond Power Solutions. This name has been around in one incarnation or another for about 100 years. Again, what do they do? Why do you like them? And is this kind of a turnaround story?
It would be a turnaround story for us, yes. And 100 years, this is their 100th anniversary. It's amazing. And we actually invested in this company back in 2000 when they were trading at 65 cents. Ended up selling them at $13. We bought back in the last 6 months in the $7 to $8 range. What does this company do? It's a pretty basic business. They make transformers, which are used in electrical equipment. So anytime you need to step up electricity to have it travel over a long distance, you need a transformer. Anytime you need to step it down to bring it into a home, for example, you need a transformer. So they're used in infrastructure builds as well. So we like the numbers behind this business. It's definitely a turnaround story. About 8 to 10 years ago, their customers, primarily in the resource segment, said, you need to build out more capacity. Well, the resource sector hit a downturn, as we know in this country. We've seen that. They overbuilt out, in our opinion, in terms of capacity. So they weren't doing the throughput in their factories that could produce a solid bottom line. There was decent revenue growth at times, but they couldn't produce a bottom line except for some lumpy quarters. Now, they've upped that. They've got a capacity or a throughput right now in the range of 70% in the last quarter. They finally made some cost rationalizations in Q1, took a one-time hit there. It was tough for the business to do. They are a family-run type corporation, but they made some tough, difficult decisions that produced tremendous profit growth in this last quarter that we saw. Earnings were up from in the same period last year, we say 5 cents. They went to 25 cents, 400% growth in earnings. That's not sustainable, but if it can even get 15 to 20 cents on a quarterly basis, we think they earn around 68 cents in the next 12 months. That gives you like a 13 or 11 times multiple. There is nothing in the market trading right now at 11 times with growth, and it pays a reasonable dividend right now, so it's growth again at a reasonable price, paying a dividend, and management owns a ton of shares as well.
And the other idea you have is Photon Control. I've interviewed the chairman, I've interviewed the CEO on Capital Ideas TV, Mr. Edmonds. So remind us of the niche that they're in, and why do you like this one?
Yeah, well, they are in a sub-segment. They essentially provide optical sensor equipment for the manufacture of semiconductors. Now they're in a segment called etch within that segment, but they are supporting, and one of the things we love about them, they're supporting the growth in this proliferation of connected devices we see, from your fridge connecting to the internet to a little device in your shoe that's going to connect to the internet. All of those devices need semiconductors. So Photon Control provides a supporting role to that by helping the manufacturing of semiconductors. We love the new management team. We really like the direction that they've taken it. We were invested in this company back 3 years to when they were trading, the 30 to 45 cent range. We just again recommended them at the start of the year when they traded at 80 cents.
And just to stop you there, you're up about 600% on that call.
Yes, and some of our best winners, and you think, why are we not selling? You might say that right now. Well, first of all, it's all valuations. I mean, we can find the stocks that are better buys after they've went up 200%. And in this case, you have that scenario playing out right now. We think that the cash that this company has been able to generate, they're a far bigger company now than they were even 3-4 years ago. So we think the cash that they have in the balance sheet is 25 million sitting there in the bank. By the end of the year, we think 30 million. There's no debt in the business. They've had 2 issues that have obscured earnings in the last 2 quarters, and we think this is an opportunity.
The legal overhang being one?
Litigation, that is out of the way. They've asserted their right to all their IP or intellectual property. So there's a little bit that'll tack into the 3rd quarter and 4th quarter, but minimal compared to what we had. They also moved into a new facility, doubling capacity, and they've increased their R&D capacity as well. That has now been signed off on by all of their manufacturers that they manufacture for. We think there's good growth heading into Q3 and Q4. The reason we know that is the company has a record backlog right now. This time last year it was 6.2 million. Right now it's 11.9 million going into the next 12 months. That is positioning the company for growth with those one-time items taken off the board. We think growth in terms of revenue and earnings in the second half of this year, trading at a reasonable valuation, and we think the company could be an acquisition target.
Ryan, next time you're with us, you've really got to give us more information.
I will, and I'll take a breath once in a while too.
We'll start with hardwoods distribution. This company does exactly what it says it does. It distributes hardwood, and a lot of these lumber-related stocks have been doing well. Here's a look at this company breaking out from the 1950 level to a 52-week high. We also have Covalon Technologies. This is a healthcare technology company with a nice convincing breakout here, breaking to a 52-week high above 250, testing that level, and then breaking out again. Now we'll take a look at a 52-week low. We're looking at Africa Oil. Week after week, we are seeing these energy resource companies fall to lower levels. Africa Oil, no exception. Much higher levels here several months ago in March, and hitting a new 52-week low right there. From the heart of the financial district in downtown Toronto, that's our show for this week. I'm Mark Bunting. Make sure you subscribe to our YouTube channel so you don't miss an episode. And for more great investment ideas through our weekly digest and morning note, subscribe to capitalideasresearch.com. Thanks a lot for watching, and thanks for investing like a pro. We'll see you next time.